So, kind of the kickoff is kind of what needs to be done this year. Last year was probably a good year for most people. Maybe not everybody, but that's what we shoot for is to improve income, business profits, and so forth. And now we're kind of having to clean that up because it's kind of going to be time to pay Uncle Sam his taxes or anything that's due at this time. I'm excited for 2026 and the opportunity to hit goals. And, so from a company goal, I'd say, yeah, we kind of fell a little bit short for our metrics, but I think we're going to surpass them this year. From a standpoint of taxes, as far as what should be people be thinking about, 2025's over, but from a tax standpoint, it's kind of where now we start really dealing with what's in the past. What should we be thinking about shoring up?
So, on the way in this morning, thinking about our conversation that we're going to have and what's important to us in the beginning of any tax year. And I know you and I share this ideology, planning for your retirement inch by inch is a cinch. And so you start the first of your year with planning, hey, let's max out on our retirement plan. Because as you know, I'm sure you deal with so many folks that you've got to get started on spending less than you make. And a good retirement plan, either at work or if you have to develop your own, you save on taxes, you put money away, you save for the future. And so from the perspective of January 1st is the perfect time to do that because you're planning for 2026. You're setting your forecast, you're setting your budgets, you're setting your expectations. And so, two accountants in the house, the first thing we do on the holidays is, we have budget meetings and forecast meetings and a glass of wine and we're pouring through our numbers. I know that's not everybody's, it doesn't get everybody excited. But you can take the very basics of what is your source of income? What are your expenses? Is there anything you can do to control those expenses? And how can you put something away, hopefully qualified pre-tax in a retirement first, or even better in a Roth, to put something away for the future and so that your money can work for you?
So, from a standpoint of finishing up the year, so if there's any taxes still due, so we want to, and those are great points about starting the new year. So, I'm going to go through a little bit more on the back end of the year because there's a few dates that are coming up. Kind of a big date is January 26th. The IRS will begin accepting the 2025 tax returns. Do a lot of people like hit it right then? Are y'all like prepared? All of a sudden you're gonna ship off lots of returns. I'm never in January. I don't know if I've ever in my life submitted a personal return in January.
Well, the first folks that we have to make space for is the financial aid folks. That's the parents that come in that have to have their return completed, toot sweet, because they're submitting their financial aid package for their college children. So that's the first 2 to 3 weeks of tax season that there's other people that are going to come in, and it's not that we're not serving them, but we're prioritizing the needy. And so we put that together, and we've even over the years gone, helped them fill out their FAFSA. Some folks just don't feel adept at that, and obviously we do. And so, we'll give them a hand with that.
Is there a deadline on the FAFSA that's in this beginning of year?
It's not a beginning of the year deadline, but there's this sense of almost kind of like first come, first serve, or, I've got to get mine in so that it can be considered. I've been through it 4 times with 4 kids, and I kind of know that it's not anything for us. Of course, we submit it. So, but for some folks, it's a life changer because, the kids could get a good amount of money at one institution, or if something doesn't work out right, they could not get that amount of money at their dream institution or something like that. And so, it's a lot of emotion in that expediency. And so that's the first thing that we do is anybody that comes to the door and they've got to have their taxes done quickly for FAFSA, then we make space for that.
Yeah, because I don't see that there's any early in the new year deadline. The main federal FAFSA deadline looks to be June 30th. But I completely get what you're saying about is kind of like they want to get in line as early as possible, get that submitted there. Because if you wait until June, gosh, that's not a good situation to be in for the fall for school from that standpoint. So that's pretty important. Another deadline that might come about is, once again, the June 26th is the submitting of tax returns. January 26th of 2026 is when, once again, IRS starts accepting the 2025 tax returns. January 31st, the deadline for employers to send W-2s and 1099s. That's a pretty big deal right there.
Right, and so we are gaming for that right now. We're acquiring address changes on 1099s, and that's a lot of our work right now that we're past January 15th.
So explain that deadline, and I guess that's a hard deadline for the listeners that maybe have just started a new business or just got some employees or people expecting. Explain what goes on with that.
Well, the first thing we did in the beginning of the year was backstepped a little bit because the amount of the limit on the 1099s are getting ready to change in 2026 to 2,000, not 600. And so we started the year saying, 2,000, but then the more we read into it, actually no, that's 2026 1099s that are due in 2027. The 2025 1099s that are due in January of 2026 are still 600. And so we a couple of clients, we had to go back through and add some 1099s.
So what does that mean? 600 versus 2,000?
Well, obviously the 2,000 or the 600 is the amount that you would pay that contractor or landscaper or whatever you have.
What I'm getting at is, if it's less than 600, do they have to send a 1099?
No, they don't.
Okay, so that's what the 600 represents. You've got to send that out.
Correct.
It's reportable. But next year, it's got to, if it's 2,000 or more, that's like easing up. That may mean people aren't reporting $1,900 in income. No 1099 was issued. I'm surprised at that.
So we've talked about this on the show before, that just because you're under the 1099 limit does not mean you don't have to file taxes on that income. So if you're a landscaper that is, you've in 2025 somebody paid you $500 and you didn't get a 1099, you still have to include that income on your tax return and pay taxes on it. So I know we've talked about that a couple of times.
And that's kind of on the honor system. I guess where that come from, people might would tend to fudge on that or something or skate by. But, if you had 100 accounts paying you $1,900, it's a good bit of income that you're not 1099 on.
It's interesting you mention that. A lot of our tax system is on the honor system. It is honorable I folks come in and like, what can I get away with? Well, look, okay, it's a bad way to introduce yourself. Let's
much
talk
for the honor system.
Let's talk about.
At least they were honest with you. Like we'd like to not pay taxes on everything.
Let's talk about the law. There are ways to save, but not by ignoring the law. You've got to know the law, and you've got to take advantage of what's in the law.
That's where an audit will get you.
Yes, an audit could find you on the other side of that, and so you would owe some taxes and possibly some interest and penalties.
Okay, so that's big work that has to be done. I know we do a good bit of work on that. My team handles getting those out. There's another deadline I don't have listed here, but it's pretty important. When are we supposed to have our 2025 taxes all in that we're going to owe?
So the rule is you pay the lesser of the 2 years, the lesser of 2025 or 2024 by January 15th of 2026. That's a very general rule. There's some income limits in there, but that describes it the best. Now, it's supposed to be equally paid throughout the year. If you wait and make one big payment at the end of or in the beginning of 2026 for 2025, over the course of 2 years, the IRS will charge you an estimated tax penalty for not paying throughout the year. So you and I have talked about that in the past.
Yep, and it's real.
Using EFTPS and paying, now it's kind of starting to think about getting away from that and just using the IRS payment system, direct pay. And you keep your confirmations and you keep all that in your tax paperwork and you pay it throughout the year as you earn it. And the way that you've said that you look at it, and I've heard many business owners say this over the years, successful business owners, is that's not my money. I've earned it. I owe that piece to the IRS. On time, I need to get that out of my account so that what's left is what we can what our firm has to work with. You don't borrow from the IRS because it's a slippery slope. You get behind the 8 ball and you can't catch up. So
I've experienced that in the past. I don't like that, and and just on whatever that number is, if you're holding it quarterly, that's 3 times that. Just think if it's $10,000 a month that you've created in taxes that you're going to owe, and you wait till the quarter, well, that's $30,000 out the door. And if you're looking at cash reports, you're being misled if that's not separated out. So I like it, honestly, to be off the books. It's their money. That's not my money. I don't want it. And how I think about it when I see my weekly cash report is what I like to look at, is kind of see where I'm at. So there's consistency there.
So to your point about January 15th, and that was a big deadline for us on Thursday, is getting everybody that the last number, the best estimate that we have that they needed to pay in by January 15th in order to avoid penalty.
You said something about 24 or 25.
So the estimated tax penalties work off the lesser of the 2 years. So let's say you have an up year and a down year. Happens a lot in real estate. You have an up year, you have a down year. You have to pay the lesser of the two equidistant throughout the year by January 15th of the subsequent year. Now, obviously, you have to make up the difference on April the 15th or the filing deadline.
Would you be penalized on that? Like, all of a sudden, well, I paid what I was supposed to in, but it turns out I'm owing $20,000 more.
And
are you going to pay penalty on that?
Not if you file or extend with a payment by April the 15th. So that's the
Okay.
point is that you pay the lesser of the 2 years by January 15th, and then you make up the difference on April the 15th.
So that's the January 15th, then the April the 15th. You're
Right.
pretty square.
Right, and you can extend if you're not quite ready, but make your extension payment, and that way, because we have to educate taxpayers all the time that, well, I had an extension. Why am I? Well, you're paying a penalty because the taxes were due on April the 15th.
See, fun, exciting
It
stuff.
is. It is a blast.